What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today, we're going to look at the Arthaus. This is Mogul's latest Padsplit offering. They dropped this on the webinar yesterday. If you're not watching those monthly webinars and you're either interested in investing on Mogul or you're already on there, I would highly suggest jumping on there. They're open to answering any questions that you have. They're always giving out, new info, letting you know when there's new properties coming up, and really just share, looking for feedback on their platform. I think there's a lot of value to be gained by getting on there. I've mentioned many times, I think this is my favorite fractional real estate investing platform. Definitely do your own due diligence. But hopefully, I think this one is, I'm going to have a couple of critical things to say about it. As usual, do your own due diligence on the platform, on the properties. I do have a link in the description to this video to all the platforms I currently invest on. Same thing applies, right? You want to dig into each one of those on your own. Don't just do it because I'm doing it. And if you haven't already joined the Discord, it is in the description to this video as well. But so this is a 9 bedroom, 9 bath, 2,000 square foot, purpose built pad split in Houston, Texas. They've already sold out $182,000, and the total raise for this, oh, did I just pass it up, is going to be, total offering is 332. So they're already more than halfway full. They just dropped this last night. It looked like they already had over 100,000 raised, so maybe it's some insiders, some of their team, or somebody else, connected to this property that's invested in it. But it's still, I know there's a couple people nervous about it. They don't want to miss these good opportunities. One thing I want to mention about that, though, real estate is it's not like the stock markets where, like, if you missed um, Facebook or Apple or Netflix or Google, like if you missed one of those companies when they first came out, over the next several years, you missed out on a lot of the returns. If you weren't investing in those, you missed out on most of the returns in the market at that point in time, right? And I don't necessarily know I think those just came to mind because those are the FANG ones, right? But in general, like you have to have, even though there's the S&P 500, if you miss out on the five best opportunities, you're going to just get crushed, right? You're not going to have great returns over a long period of time. Real estate is not like that. You can miss every good deal, right? Or you can miss, all the best deals and still have really good performance as long as you are also able to avoid the worst deals, right? And so I'm never in a hurry to jump into a deal. I want to just really make sure I'm doing all my due diligence and I'm figuring out, is there a reason for me not to pick this one? And if I'm, being plotting and prudent and, moving slowly and I miss out on some, it's not the biggest deal, right? I mean, there's going to be the next one. On average, these guys are putting out fantastic transactions, or fantastic investments, in my opinion. Again, look into it on your own. But I've been very happy with the performance of the ones that I bought. Some of the ones that passed on are also doing well still, or many of the ones that I passed on are doing well at the moment. So it doesn't mean, necessarily that those were right picks, but I think that there's nothing wrong with just taking your time, and if you miss one, it's really not a big deal, right? It is. I know it can sometimes feel that way when you have capital sitting around, but just they have another one out next week, and the week after that, and the week after that, and so it's one of the things that I try to never get too excited, especially when they start to sell this out. Now, Mogul, the way they do their marketing is great, right? They're really working to get you excited. They do these VIP launches and the drops on the webinar, and they let you know how much is raised. And I think on the other tab it tells you, oh no, it's still raised on that, but somewhere on their site you can see like how much is left, right? And so they do a good job of sort of creating this urgency. And they're selling out properties, and just so it's not a bad thing that they're good at marketing, right? But it always makes me cautious. But luckily they are, consistently backing that up with deals that I think are good deals, right? Um, this one, though, there's a couple of outstanding questions that I have. So it is brand new construction. It was finished last year, and then they, went straight to Padsplit. One of the things, I always do this. I like to look at the public records. Houston, and this is Harris County, is their CAD. They have this listed as being built in 2021, which it was completed last year, and they have it as 4 bedrooms, 2 baths. So the reason I like to do this, and I know when I've done this in some other places, it's maybe not as accurate. In Texas, most of the counties are pretty good at keeping up on this, and Houston's a market that I've worked in quite a bit. Um, when this doesn't match up with what my property says, it makes me worried that there was something skipped in the building process, that there weren't appropriate permits, that they switched out plans. So, I'm going to show you what's going on with this property. And I'm not saying that's not definitely what's going on here. I actually sent Mogul a question about this. They didn't have time to respond yet, but once they do, I'll give an update. But so this is a listing for the property in 2023. You can see, it was in the process of being built. Oh, they're just showing other stuff nearby. This is the only actual listing photo. So it was in the process of being built. Um, Let me close this out. Make sure I have it on client friendly. Yep. And so at this time, they had like approved plans that you could get a copy of with this listing. This one expired, but so let's see. This was listed in 2023, right? So my what I think happened, they submitted plans, they got approved in 2021, and that's why Harris County has a 2021 date. It never actually got done. It sat here unfinished for a while. Whether the I didn't see a transaction, so whether the current owners bought it at that point in time or not, I'm not, what I think they did is I think that the current owners might have bought this off market from this owner or from this seller, and then completed the property. So a couple of things worry me about that. One, because this listing they had mentioned that there were approved plans, did they go forward with those plans, which is the 4-2, and then just like throw the extra bathrooms in after the fact without, after they got their CO? That would be something, I'm just always skeptical. It's not that I think that's what actually happened. I think there's a risk of that, right? And so whenever I buy properties like this in real life, I like to contact the city or the county, whoever's responsible for permitting, and find out, okay, were there permits for this? I noticed the public records is different from what the property seems to be in real life. What's the story there, right? So that's something I always want to find out. For Mogul's deal, I'm not going to go and call the city and alert them to this, if there is some actual discrepancy. But at the same time, it's something that I did send that question to Mogul. So hopefully they'll be able to tell us like, oh no, they did switch the plans. Harris County just hasn't updated it in their records yet. And then the question then becomes is, when they do, is that going to change our taxes? I don't really think it'll be a big difference because the Harris County actually has it as being 100 square feet larger than this. So I think that should be fine. But so just an open question for me, right? And especially because there's some evidence that it sat there framed and not built for a long time. It makes me worry a little bit because that's not great for the property itself. But I don't know. I mean, maybe, did that sit there for a couple of months or a couple of years? And the answer to that will change like how much that worries me. So those are things I typically want to dig into this. Now, obviously, it is done. There are 9 bedrooms and 9 bathrooms, and it is, has been operating. I say, and it's stabilized with actuals above the year one underwriting. Um, this one I found a little bit interesting too, because if you look at the current listing, or the on Padsplit, this is the property itself. There are 3 rooms available at the moment, so 3 out of 9. It seems like a lot of vacancy for it being stabilized, right? And I know at any given time you can have just rollover, so maybe it just so happens that it's not a great moment. In the contract, they require that at least 6 of the 9 bedrooms were occupied at the time of sale. Um, so I don't know that worried me a little bit too, right? I mean, it's one of the first ones that we've seen them pick up with significant occupancy. We've seen, I think there was one other one where there was a room available, but I don't remember seeing another one with three. So, um, I mean, obviously, and you don't need me to tell this, the property itself looks fantastic. Like for what they're doing, I think that they made a great product. Um, one of the, whether or not the value would hold up as some other use when we have this purpose-built product is also worries me a little bit. So, and I've questioned whenever I've had a problem with their properties, it's almost always been from a valuation standpoint, not from from yield. This one, I mean, I believe their yield because so far they haven't let me down on that. You know, having only 66% occupancy, it's not great. Um, but there's no way for me to like look into there's no like air DNA for Padsplit yet, right? There's no way for me to actually look at market occupancy data that I know of. If you're familiar with a tool that I'm just not aware of, please feel free to share that with me. I know I can like look on Padsplit in the area and see like what else is available, but it doesn't really give you a sense of, that's just a point in time. It doesn't really give you a sense of like how many are filled compared to how many are sitting there. Um, so I don't know, that's a little bit tougher to dig into, but the valuation, this one really got me. I thought this 3614 Claiborne. This is actually the Krakow, which is another one of their properties. This was one that I decided against buying, but it is, it was for a number of different reasons. It's a short-term rental. It is relatively nearby, so I want to show you. So they have that for a comp, and then they have. Oh, I pulled up the wrong tab. And then they have this 3232 Wentworth, which did I keep that up? No, I didn't keep it up. Um, which it seemed like a relatively decent comp. When you look it up, it looks like it was an 8 bedroom. So I think maybe this was operating as a pad split. I'm not sure. Um, but so let me show you the map. So this is the subject property. This is the the Claiborne property, which is pretty close to it, right? I mean, it's pretty close, but this is a different subdivision. And usually when I'm doing comps, I like to pull, from the same subdivision. But this one, it's really strange that they used it because it's 3,200 square feet. Our subject property is 2,000 square feet. And they only paid 20,000 more than they're paying for this one. So that's mind blowing to me, right? Like I would never use a comp for my, when I'm trying to do values that's more than 50% different from my subject property, right? Normally I'm trying to stay within 10, maybe 15% size wise. So that's a huge difference. If you started to look at dollars per square foot, we're paying way more for the Arthaus than we paid for the Krakow. And then the Wentworth, I actually think that one was fairly decent, but again, you can see they paid significantly less, and it's 25% larger, and that is over here. So I mean, we've gotten pretty far away when we look at that one. Um, Oddly, when they didn't use as a comp, and which is one that I found on my own, just looking because I have MLS access in Houston. Oop, want to keep that client friendly so you don't see anything you're not supposed to. This property is the same. It's not the same legal subdivision, but it's very close. It's the closest of all the properties, and it's only 1,700 square feet. And so, like, this is the only one that if you used a dollar per square feet, which is how you typically look at the value of properties, so 277 per square foot. Um, then we start to get. So let's see, 277 times 2038. Yeah, then we get like we're right on, right? I mean, it seems really accurate, right? Like this is the closest property to it. It's built in 2023. It is a 4.2, but it's, size wise, it's the closest in size as well, right? I mean, it's only 300 square feet or 400 square feet different, and it's the closest in proximity. So I'm not really sure why they aren't, why they didn't list that comp. I think one, it gives them the most credibility for a price, and uh, it's the closest in size, closest in location. Um, it's a lower price, right? If all you're trying to do is look at the average of prices, but it is, as a price per square foot, I mean, it's the closest. So, Um, when I was just looking at their comps, I actually was kind of worried about the valuation when I found that one other, and it is the only other comp that I found that was nearby. It made me feel quite a bit better. But it is, one of the things that I do question is if you go to sell this in the future as a 9 bedroom, 9 bathroom home, if it doesn't get sold to an investor who's planning to use it as a pad split, who's the buyer for that, right? And so this is one of the things they did actually talk about on the webinar a little bit, that the pad splits are going to have better yields, but they're not necessarily going to have the same level of capital appreciation. I think this is one of the reasons why, right? That you're not going to have like these owner occupant buyers wanting to buy these in the future. They're not going to be as desirable of a property as the Airbnbs tend to just be nicer, physically nicer properties, and the ones that are set up in such a way that you could imagine owner occupants buying them or somebody buying them for the business. So you have a larger buyer pool, and therefore I think you can get a little bit, you have a better chance of getting that real appreciation. Plus the markets, the areas tend to be a little bit better. Here, I mean, it's kind of interesting. We're very close to this, the Krakow here, which is, so I don't know. I mean, maybe you'd expect something similar, except that property, is this it? Yeah. Looks just a lot more like a regular single family home, and um, as you can imagine, having buyers having a much easier sale on that one, right? So anyway, that's my valuation issue, right? Like I think with the one comp I came up with, it seems like okay, we're pretty safe dollars per square foot. I really don't like that these are the other ones that we're using. I think maybe this one's just handy. It is a new listing. Maybe they'll update this. And also they always do an appraisal contingency. So, if it doesn't appraise, they can back out. So I think, they've got that going as well. Um, but yeah, so I have a little bit of concern because of that. A little bit of a concern because there are three vacant right now. Let's see. Oh, okay, close this. From the spot crime map, it only took a couple of days to fully populate the map, right? Which is one of the things I'm always looking at. How far back did it have to go to come up with all these crimes? But one of the things is interesting is, if you really zoom into this neighborhood, there wasn't anything right in the immediate neighborhood, which is a little bit different if you remember when we looked at the Krakow. It was like really right in the middle of where there was more crime, and which is one of the reasons that I didn't invest in that one. Um, which reminds me, this property is in Houston. Houston's a market that I like a lot. I think Mogul's been real smart about how they pick markets. Um, yeah, I did more, if you watch that Krakow video, I did a little bit more, I think, on that one, but also in let's see, what is the one that I've got there? Oh, let's see. It is the Axelrod is the first one that I bought in Houston from them, and so I dug into the market more on that one. I try not to just like keep repeating the same things because they are just buying in the same markets over and over again. But I mean, Houston is it's a market with a growing population. It's pro business. There's a lot of reasons to like it. Um, One more concern that I have about this one, if you watched my video about pad splits and the legality of them and the trend towards more permissiveness as far as cities allowing them, one of the things, and if you didn't see that, it was just a couple of days ago, and I was like, I think I called it like illegal boarding houses or something like that. But I'll put a link to it at the end of this video. But if you saw that, one of the things that I think can help us like mitigate that risk a little bit is having homes, like their Pinkman that's only 6 bedrooms or 6 bedrooms, 6 baths, right? I think the fewer bedrooms you have, the less likely, if there is new legislation, that it's going to be something that's going to cause you problems, right? Like as 9 bedrooms, this is an amazing density to have in one property. I think it's good it should be good for us from a yield perspective. But from a regulatory risk perspective, I could imagine sometime in the future, the city or the county or the state coming out and saying, you know what, you can only have 8 people in a home this, either you can only have eight unrelated people, like that's the way they usually are framing it, in a single family home in this zoning, or some limitation like that, or six, or if they're going to limit it, it could be 10. I don't know the number, right? But I can imagine if they do put restrictions on this type of use, one of the ways they'll do it is by just the top line number. And so, and like I said, I don't, in that video I go into, I'm not particularly worried about that. I think that the returns that we're making on this type of product and the trend in that space is that we're not going to have problems. But it's something that if I'm, I would feel remiss to just leave it out, because I think it is a real risk, right? And I think that uh, the more you start to see these purpose-built properties, the more it might start getting attention of people, right? I mean, or that we have this massive density. Um, One of the things that's really strange is the Google car didn't drive down this street. So let me show you from here. Um, when I grab my little guy here, this whole section is grayed out. So for some reason, it didn't drive down that street when it took these pictures. So I can't get a real good sense of the street that we're on. It's obviously, there's some new construction, there's some older homes, and then there's some just vacant land as well. Like this, I think is a brand new construction, or relatively new construction. And see, that just jumped us all the way down to the other end of the street. So I don't love that. I like to usually spend some time zipping around like this, and couldn't. But as far as like this location in general, we are between two universities, right? We've got the what is it? University of Houston, and I don't even remember what the other one was. Oh, I just saw it, and then I zoomed out. Texas Southern University. So, like, I mean, for the types of, midterm type stays, I could imagine maybe you get some students here, maybe you get some visiting students, people that are coming for one semester, um, visiting researchers. I think there's all kinds of people that you could get like that would be attracted to this location. And then all their regular, workforce housing type of users, just people that, for whatever reason, are looking for a short term, or a midterm stay where they're going to be there 3 months, 6 months, 9 months, just need a room. So I think the location from that standpoint is attractive. Uh, it is, yeah, when you look from above here too, you can see like there is a lot of undeveloped land, right? So it's kind of interesting to have this new construction in this area. Um, Oh, I tried the other thing. So let me jump into a couple other things. Let me start to delete stuff, and then I know I'm kind of all over the place. I wanted to get this out. I had a couple people message me about this, about how they're selling out quickly. So I wanted to put this out, as quickly as possible. So sorry if this is a little bit jumbled. I know you're probably used to that from my videos anyway. So spot crime map, I'm going to delete that. I couldn't get the FEMA flood map to load properly, and I thought that was really strange. I don't know if it's just it was having a problem when I was doing that. So if you've looked into the flood map for this one, let me know. I know that question came up on the webinar, and he wasn't sure yet what it was. So if you know that, if you don't mind putting it in the comments or jumping in the Discord and saying that, I'd appreciate it. So yeah, for me, let's see. There's that. We already went over this, where it's, there's three available rooms, um, from 255 weekly, and I think that one of them that they had is actually 270, 255, 255, and these are. I mean, again, like I don't love it when they have discounts. Um, the fact that this person gives a week free if they stay for 6 months. So, they're doing the things that should be attracting people and keeping it full. So I am curious, is it the time of year? School's out right now. Maybe there's less demand for that. I don't know, but I know short-term rentals. This is a popular time right now. So let's see. I already went through this map. Oh, I wanted to show you, the obviously. I mean, obviously you can walk to those things, but the other things we're always concerned with pad splits, are two things, right? We want to worry about parking, and we want to worry about, how close is the closest transit stop. Let's see, where was the train? And you can see, I mean, we've got a bunch of transit stops nearby. Um, this is where we are. I thought that I had seen one closer. We've got them there. Maybe there's not one here. Maybe this here, or this. Oh, this I think is the closest one here. Which is, pretty short walk. Uh, I mean, not for me. I'm not walking that far, especially not in the Houston heat. But in general, for these, what I'd love to see a bus stop like on this street, but I didn't see one, right? It is a couple blocks away to get to it, but not too terribly far. And then parking on this street, normally I like to see a corner lot or like to see, not just this tandem parking. So I am sort of curious what the parking setup looks like here. And you can see again, I mean, this was data. Well, that's not right. This definitely is not. This timestamp is not right, right? Usually you can actually see when that is. Maybe it's only in the street view you can see the real thing. Um, but so I don't know, with 9 units, how are we parking? I know I just looked at this. Like obviously with such an empty street right now, I guess street parking is not a problem at all. But if things start to fill in, like what is that going to look like as well? Yeah, this was back June 2024. That's where you can always see the actual date. But yeah, we just zoomed past it. I don't know why the Google car didn't drive there. So unfortunately, I have, I guess, more open questions than I'd like to at this point in time. For me to jump in, I'm not buying this one yet. I really like the idea. So I'm torn, right? I like having 9 bedrooms, 9 bathrooms. Like that's fantastic from a density perspective. You'd expect it to mean you'd have smoother income because the more units you have, the less a single vacancy is going to affect your occupancy rate. But the fact that there are 3 vacant units is, that worries me. The fact that I don't know yet, we haven't gotten confirmation as far as the permitting and whatnot. Now, I think that this is something that they should, I'm assuming they look into this on everyone during their due diligence, and I'd be shocked if they're not, just because of the way, I think Mogul does a good job with basically everything that they're doing. And so my guess is the answer is, they've looked into it and it's fine, or they're going to look into it during due diligence, and if it's a problem, they're not going to move forward. Um, but I don't like, pulling the trigger and investing before I get answers to all these questions, right? And again, I like, so don't like the occupancy. The valuation, the only comp that made me feel real good was the one that I found, not the ones that they were using. Um, I don't know. I don't know if this one was just a little rushed, right? And that's why they didn't have more. I have seen them update these, right? So they might update them once they have once they have the appraisal or once they're further along. Let's see. I mean, obviously, still a big fan of their year one yields, right? I mean, this is going to be a unlevered yield of 10%. Um, oh, wait a minute. Unlevered cash on cash. Oh no, unlevered. Yeah, levered yield. That's what I mean. Your levered yield, 10.2%. It's a fantastic yield, right? And that's, they're underwrote this looking at what it did over since it started last year. So I feel pretty good about that. I feel pretty good about that income. Um, it does just worry me that there's 3 vacant units right now. I don't. I'd love to know, is there some story behind that? How did that happen? Oh, and that's the other thing too. So let's see. 15.7% IRR. I always like to do it without the refinance and see how different it ends up being. 14%, not a big deal, right? I mean, like when we're getting into those mid-teens, I don't need them to model a refinance for me to be happy. 14%, 15%, like most of your return on these deals is coming from your average yield. Now we saw the average yield go down a little bit when we did that because obviously part of the refinance is lowering the payment in the future. Um, and again, we've talked about. I'd rather just not always model a a refinance because you just never know what's going to happen with interest rates. But I think it's a pretty conservative. Sometime in the next 5 years, what do they say? Getting rates down to, um, or do they do 4% in the next 5 years? That's a little low. That's a little on the low side. I don't know that we're going to get rates that low. Um, I don't remember seeing it that low on other deals. I was thinking that they usually try to say we get to five or something. But in any case, I think it's perfectly possible you get there, but I'd rather just not model it, right? And then, okay, I still have a fantastic average yield and a decent IRR. So, that's just my opinion on that. Um, I think for me, this is probably not what I'm going to buy. I just really don't love that there's three vacant units. I don't love. Uh, I think that I probably stick more a little bit more to the ones that have less total bedrooms. I don't know. I really liked the Pinkman. I liked that it was 6 bedrooms, 6 bathrooms. Like I think six is a number that it's hard to imagine if they do, create some restrictions that six is going to be a problem. I mean, maybe that's just a arbitrary number in my head, but as you get more, I think it's a but again, I mean, I think again, it's a relatively low risk. It's a theoretical thing at this point. It's not breaking the rules at the moment that I'm aware of. Um, that valuation, yeah, I mean, that's everything that I've got on this one at this point. I'm sure a lot of you have already done some due diligence. Feel free to share in the Discord, share in the comments. I know sometimes the Mogul guys watch these. Feel free to put, comments in these videos if I'm off about something or to correct me. It's certainly not going to hurt my feelings because I just want this, I want everybody to have the best info possible to make these investment decisions. And obviously, I mean, this is going to get sold out. I mean, people are buying this. That is one thing that's terrifying to me is that uh, you could see this number going up during the webinar. I mean, I have more and more come to trust these guys, like to put out good deals, but I still just would never invest money without doing some of my own due diligence into the property itself, right? Everybody has a bad day. Everybody's capable of putting out a property that's just not going to be as great as their average deal. So I don't know why you wouldn't just want to dig into it a little bit more. Um, I don't know. Seeing that number just climb did sort of worry me a little bit. Like it's great for them, and the problem is there's so many of these platforms that are terrible. I don't think that's who Mogul is. I mean, like when you ask them questions, when you look at the deals they do, it's clear they have real estate chops. But as there's more and more, demand for their product and more demand for volume on their platform, um, there's just the potential for there to start to be some properties that slip through that aren't great deals. Now, hopefully, they have all systems in place to make sure that that doesn't happen. And really, regardless of what you do, you're always going to have some dogs in your portfolio. Um, but we have the opportunity to dig into each and every deal and figure out is it one that we're comfortable with the risks. So I don't see a good reason not to, unless your time is just so valuable that you just don't really care and I'm just going to YOLO into every deal. And it's honestly not a horrible decision, I think, if you're somebody who doesn't know anything about real estate and you've happened to stumble upon this platform and you're like, "Hey, these guys seem to know what I'm doing or know what I'm doing, seem to know what they're doing." And so let me just jump into every one of their deals. I think I've said this before. I think if you did buy every single deal they put out, on average, you're still going to do perfectly fine. Um, but I just don't want to be average, right? I want to figure out like I want to pick the ones. And again, I'm not trying to pick the biggest winners. I'm trying to make sure that I avoid any of the risks that like maybe they're taking a risk that I'm not comfortable with, right? Because in real estate, this isn't a game of picking winners. It's a game of avoiding losers. Because it's more like a fixed income product. I talked a lot more about that in some other videos. Um, if that doesn't make sense to you, let me know and I'll link to the one where I think I spent like 40 minutes talking about that idea, and I think it's pretty important to understand when we're looking at real estate. It's much more important to make sure we don't have losers because we don't have any of those 10 baggers, right? We don't have any of these huge winners. So it makes the losers have a bigger impact. That's what really impacts our portfolio, not the winners. Anyway, that is it for me for today. Until next time, I'm just going to keep making mistakes so that you don't have to.